Friends, this is Proviji. Welcome to my video. This is about the investment scenario in the light of geopolitical conditions. Friends, some of you may know what's going on in the world right now in terms of politics and how it is affecting many countries and their economies. And stock markets in different countries are showing volatile behavior. Interest rates and corporate earnings are not the only things you should be looking at when planning your investments for 2026. It's not just central banks that are shaping the world economy in 26. Geopolitical maps, border policies, and national security are also having an effect. Geopolitics is now the unseen force that moves your money from oil prices to stock markets. There is one thing you need to know if you want to make smart investments in 2026. That is the geopolitics. Geopolitics is the new market driver. GeoAlpha is the strategy of turning geopolitical tensions into investment opportunities if you know how to do it. For a long time, investors were mostly interested in interest rates, inflation, and GDP growth to take investment. We have completely moved on from a time of hyper globalization and cutting costs to a time of friendshoring, techno nationalism, and building up of our defenses. Today, we are going to look at the three biggest changes in world politics that will shape 2026, backed by most recent data, and talk about how you can set up your portfolio to take advantage of them. So let us see that. Theme 1, the $2.6 trillion boom in defense. The first change is the global rearmament cycle. Forecast International says that by end of 2026, global defense funding will reach an incredible $2.6 trillion, an 8.1% increase from 2025. The year's focus more modernization and growth of the defense base. In the Europe, going over 2% of GDP goals, and in Asia Pacific, high deterrence spending. This is not just about old military hardware, it's all about new defense technology. NATO countries are not only meeting their 2% GDP defense goals, but in some cases, they are even going above and beyond, aiming for 3% to 5%. This is because of long term wars in Eastern Europe and rising tensions in the Indo Pacific. Look at the investment angle. Smart investors are looking beyond the old defense contractors. A lot of money is going into aerospace innovation, autonomous systems, and most importantly, cyber security. In 2026, the first front in a war between countries will be digital. It's becoming necessary to own companies that offer sovereign cloud solutions and cyber defense for important infrastructure. Theme 2, the friendshoring migration of the supply chain. The second one shows that there's a huge rewiring of the world's supply chains. Friendshoring is no longer just a corporate buzzword, it's a real economic fact that can be measured. Western companies are moving their factories to countries that are politically aligned to avoid tariff crossfire and supply chain shocks. Let us look at some numbers. Apple's decision to move about a quarter of its iPhone production to India is just the beginning. In countries like India, Western companies are building global capability centers. At the same time, Mexico has become a major manufacturing hub for North America. India's exports to Mexico recently reached an all-time high of $8.9 billion, mostly thanks to cars and car parks. We are watching emerging markets trade a lot with other emerging markets to send goods to the West. So globalization is breaking up. Trade routes and partnerships are changing because of geopolitical tensions. India's imports of Russian oil fell by 23% because of changes in the world order. Trade agreements and sanctions are changing the way goods move around. This makes winners and losers. Winners are domestic manufacturing and strategic sectors. Losers are industries that depend on exports and have unstable routes. The investment angle, you don't just put money into the brands that are moving their factories. You put money into the picks and shovels of this move. Think about industrial real estate in Mexico, Indian manufacturing ETFs, and the global logistics companies that are helping with this huge move. 3. 3. AI infrastructure and techno nationalism. Finally, the third change has come, that is techno nationalism. Artificial intelligence is not just a tech trend in 2026. Governments see it as important national infrastructure. The race for AI dominance has led to geopolitical scramble for two things: energy and semiconductor. India has recently held a global AI summit with big names from around the world to get other countries to invest there. Countries are protecting their intellectual property by making it harder than ever to export advanced chips. But what is really holding things up right now? Power. Power is required. AI data centers use a huge amount of electricity. Governments are starting to understand that they can't win the AI race without a reliable grid. The investment angle. Big tech companies get all the attention, but the real geopolitical game is in infrastructure. We mean companies that manage power, backup energy providers, uranium for nuclear power, and important minerals needed for both high capacity batteries and the grid expansion. Resilience is the new growth in 2026. Energy and oil, the world's most sensitive assets now. Energy markets respond right away to geopolitical risk. Recent tensions in world politics affecting markets. About 20% of the world's oil supply goes through the Strait of Hormuz. Any risk of disruption can cause prices to rise and inflation to happen all over the world. Because of worries about supply, oil prices went over $71 per barrel recently because of the rising tensions. India is one of the biggest oil importers in the world, so rising oil prices put pressure on the economy and make the market unstable. Energy geopolitics has an effect on inflation, fuel prices, and the stock market. Where smart investors are now looking in terms of investment themes for 26, it is 1. Security of energy, that includes oil and gas, infrastructure for LNG, reserves for strategy, and second one is defense and space. More money is being spent on the military around the world. Third one is important minerals and mining, including lithium, copper, and rare earth metals. Fourth one is manufacturing and infrastructure at home, including moving the supply chain. The safe haven assets are gold, sovereign bonds during the crisis. What this means for the Indian investors: rising oil prices leading to inflation and pressure on the market, changes in trade leading to new manufacturing opportunities, rising spending on infrastructure and defense, the transition to renewable energy and electric vehicles. Geopolitics is not something that happens far away. It has an effect on job growth, inflation, stock market performance, and petrol prices. Conclusion and call to action. Investing is not about numbers anymore in 2026. It's about knowing how the world works. Markets are being shaped by wars, alliances, resources, and trade routes. Keep an eye on geopolitics. Expect changes around the world. Put your money where the world is going, not where it was. Because in the new age, geopolitics is a new market signal. In conclusion, geopolitics is no longer a risk that you have to deal with. It's a structural trend that you can invest in. By aligning your portfolio with AI infrastructure, defense innovation, and supply chain friendshoring, you put yourself on the right side of the changes in global policy. What geopolitical trend do you think will have the biggest effect on the markets in 2026? Please leave your thoughts in the comments below. If you liked this breakdown, please give it a thumbs up. Subscribe for more market analysis based on data, and I will see you in the next video. Please subscribe.